Welcome back to another module. In this case, Managing Credit, module number 2, Credit Reports and Scores. What are they? What do they mean? You're about to find out. So, credit reports. They are a documented history of your credit from lenders who have extended credit to you. And they incorporate all of your credit-related borrowing activities. What activities, you may ask? This would include such things as the type of credit utilized, the length of your credit history, how much you owe, the ability to pay on time, of which not only will I go into more detail on these in the next couple of slides, but also in another module entirely, where I go into the tips and tricks of the sort. And where does this information all get reported? Well, it gets reported to these 3 credit bureaus, and that is Equifax, TransUnion, and Experian. The information contained within these credit reports that is being reported to these credit bureaus leads to the generation of what we call a credit score. Now, is there too much text on this slide? Debatable. So I'm going to move on to the next one. Okay, so how is credit measured? Well, we use this system called a credit score, which is essentially a numerical snapshot into your credit history to help estimate your credit worthiness. And it's based on a scale of 300 to 850. And I have 2 things here, both of which are going to show you that it's not entirely agreed upon of what is considered excellent or very good, but again, both of these give you a general estimate of like what would be considered, standard procedure and practice of what is, considered, in this case, I'd just say healthy. I mean, having a credit score of 30 is just, that is for a different topic. But it's important to note that just because you don't have credit at this point doesn't mean you have 0 credit or a 0 credit score. Like I said, it's a system that's based on a scale from 300 to 850. Confusing, I get it, but it's just kind of something to know. You start somewhere in the middle and you build up from there. You don't start at 0. And this is more into the credit-related activities, which is how a credit score is calculated. Now, I came up with this idea as calling a credit score essentially a habit gauge or a habit calculator because it's based on what you're currently doing, how you currently treat your credit, and whatnot. And your credit score is calculated on payment history, amounts owed, length of credit history, new credit, types of credit used, which I'll explain more later. But I have this really nice pie chart to essentially show you that these ones right here, they make up almost 2/3. And so especially when you're starting out building credit, which I have a module on, this is where your priority should be. You should really be focused on making sure that you have a really good payment history and that your amounts owed are all your ducks are in a row. But this is where you should focus most of your attention. Again, which I go into in another module. But when you apply for a loan, like I said, your credit score is just it's just a snapshot, right? It doesn't tell you everything. It tells you a good number of things as a numerical representation and as a snapshot. So when one applies for a loan, there are other things that lenders consider. And they've come up with this term called 5 C's of credit because it sounds nicer than just calling them what they are. But that would include things such as the capacity or your ability to pay back the borrowed money. Okay? The next C would be capital, the money you can pay immediately as a down payment. Collateral, which is something the loaner can repossess if you cannot pay. That would include such thing as a car, your dog. I'm just kidding. Obviously, collateral is clearly referring to a hard asset, which is a tangible asset that has some financial value that is associated with it. So like a house would be collateral. And then character, which is credit history. And then the last one are conditions, which is, the interest rate and the amount of principal. And in this case, the amount of principal is referring to essentially the size of the loan. Are we talking about a loan that's, $2 million, or are we talking about a loan that's like, $700,000, right? Those are all aspects that a lender would like to consider when they're going to come up with some sort of rate to give you. Additionally, like I said, there's a lot of information about interest rates, but interest rates, your credit score helps you get a better interest rate on a loan, but interest rates are also affected by economic standing. In this year of 2022, interest rates are going a lot higher. During COVID, the general interest rates, were quite low. But again, these, like I said, these are the 5 C's of credit, and these are what are considered in addition to your credit score when you apply for a loan, or when you apply for a new credit card, or when you apply to get some form of credit tied to your name. Okay, so now that's all we have for this module. The next module is module number 3, obviously, 1, 2, 3, 4. And we're going to be talking about credit cards. We're going to be talking about what they are. Clearly, I'm sure you're aware of credit cards, and I know most of you know what they are, but we'll get into more detail about them. And then kind of what are they different from debit cards, and just a general discussion of kind of what credit cards are. And then module 4, and then you're done. So way to go. Thanks for sticking it with me, and I'll catch you on the next module.
My name is Rick Haskell, and I'd like to thank you for watching this installment in the Student Empowerment Series. This series was prepared by students in the Bill and Vieve Gore School of Business as part of our outreach through the Center for Financial Wellness. I'm a finance professor here at the college and director of the Center for Financial Wellness. We've prepared the Student Empowerment Series to assist students in important elements in their life and their progression through the college, part of their Westminster experience, if you will. In this series, we take a look at financing higher education. We look at budget, credit, and savings, and we look at some of the more important elements of adulting. We'd like to invite you to follow us on social media at our Instagram, YouTube, LinkedIn, and Facebook sites. You're welcome to use the QR codes provided or simply go to this site. Thank you.